Hello, thanks for checking out this video presentation. If you're watching this, it's because you emailed me some inquiries, some questions regarding the rent-to-own process. If this may be in particular regarding Winding Lane. If that's the case, there's a little kind of a session in here where I talk about kind of how the rent-to-own concept came about from my perspective, and so hopefully this will be helpful to you. With that, I just kind of want to jump right in, and I got to apologize in advance. I'm not the most tech-savvy type of guy, so this will probably be unedited. This will be an unedited version, and so kind of what you see is what you get, and just bear with me. So a little bit about me. My name is Ryan Colcourt. I'm a realtor. I'm currently licensed with JDK and Associates. I've been licensed around 1997. However, that was more for personal use, personal investments. In fact, the first home I bought was this condo in Winding Lane. From there, I kind of got a couple more rentals throughout time and worked for a big oil company. Did really good there. It was a great company. Injured my back, had to leave. So around 2018 or so, I decided to venture out and help first-time buyers. That's kind of was my passion. Then the pandemic hit not too long after I started helping active clients, and kind of slowed down the first-time buyer thing. We were getting beat out by a lot of Silicon Valley, cash bidders, conventional loan type people. So it kind of burst my bubble a little bit, got me a little bit down. A lot of the buyers I helped were, FHA type of loans, so slowed me down. But now it looks like we're at a point in time where, God does what He does, and maybe this rent to own, it seems like an ideal time. So if this program or process fits and works for you, then hopefully we can work something out. So people that I'm kind of working with on my team, Brandon Tatum, he's my preferred rate, he's my preferred lender. And I do have a credit restoration guy, Diego Cisternas. I can get you all their contact info as we get more into it, as you want to follow up. And, this program may be of interest of you. You may, most likely, oftentimes, you don't need credit restoration. A lot of people think they do, but they're actually in better shape than they perceive most often than not. So real quick, here's the point where if you're interested in Winding Lane, this is kind of the story, the background of how things got me started in real estate and as a realtor and just rental, investment properties, etc. So I'm dating myself here. I am 40. I'm going to be coming up on 49 years old, so forgive me on my times. But I was recently divorced at the time. I was a single dad with 2 kids. I was living with my parents up in their loft. From that divorce, I didn't have much. I didn't own anything, but we did have some credit card debts and other people I didn't have paid off and so forth and so on. And this was about the time when the .com era was booming, so I worked for a software company at this time. And I guess I had a lot of stock options, which I knew nothing about, but I had a little bit of money, not a ton, but enough for a down payment if I needed it, with some stock options, which I had no clue how that worked. And I was kind of down, depressed. Like I said, I had 2 kids. I was raising them on my own, and I thought I'm going to go nowhere. I didn't make a ton of money, but God kind of revealed to me that I had some money and some stock options. So I talked to my parents and said, "How does this work?" They said, "Oh yeah, you get a little bit of money if you want to exercise these options." So then I started pondering how I could buy a home, and I contacted a friend of mine. He's kind of a successful kind of guy. He owned his own construction company. They referred me to a lender at the time, and he ran my credit, and it was pretty bad, but it wasn't too bad. And he gave me a list of kind of action corrective items I needed to take care of. At that time, I was just like, I don't even know if I had a cell phone, but it was landlines, calling, and emailing people. And so I wrote a few letters, did what he suggested, cleaned up my credit, and yeah, that was that. So then I think it was like only 3 months time from there, I was out shopping for homes. And if you want to check the condo story for 2962 Winding Lane, that was the first home I purchased. And you can go check Zillow for the information as well. But I bought that in July around 2000. And then not long after that, I actually got married to my wife of 22 years, I just mentioned. We bought it for about $124K in July. And then we rented it out. I remember at a time it hit a market high of like $300K, and someone actually offered to buy it, and we were kind of selfish and kept thinking it was going to go skyrocket high at that point in time, so we didn't do it. We kept renting it, and then that was that. So now I actually sold it to a buddy of mine. I carried the note, and he's renting it. Now he's selling it back to me. So this thing's got an interesting little history. But like I said, when I bought that home, it changed my life, and I became a homeowner. And my credit was restored, and things were kind of looking up. I got some equity, and we were actually eventually able to pay off that condo through another home we bought, equity line credit. And then, like I said, we've been renting it, and then we financed it, sold it, and now we're buying it back. So it's kind of put on my heart to kind of try out this process here. So real quick before we get into rent to own, I just want to, and again, I have a nice little video. If you want to email me, I can send you the video link that kind of summarizes the home buying process. But again, the first step in buying a home is to meet with the lender. And usually these are referred to by the agents. We work closely with a lot of lenders. You could use, obligated to let you know, any situation when you purchase a home, you can use any lender you want. I'm using for our preference for the Winding Lane in particular, Brandon Tatum, for the vetting purposes, because there's a background and credit. You do have to run credit, whether renting or owning. So just so you know, but when you get to the point of purchase, you can use however you want. But the first step is usually, honestly, a lot of people think you contact your agent, your realtor, which is kind of okay, because a lot of times they're going to tell you to go find a lender and then give you some referrals. But really, your first contact really should be with the lender. And I always say, and agents get mad when I say this, but honestly, your relationship, you're kind of in a better position to have a better relationship with your lender than your agent. They're the ones helping you get the money, and they're the ones that tell you about your payments, and what you can and can't afford, and how it works. And it's really kind of, in my perspective, when you're buying a home, you want to know what price, payment, principal, interest, taxes, insurance you're comfortable with, and to not exceed that amount. Just because they pre-approve you for $600,000, you might be more comfortable with the $450,000 payment. If you understand what I'm saying. So doesn't mean just because they tell you they're going to give you $600,000 to buy a home that you want to max out and go all out. But that's the first step. Usually you want to meet with a lender. They're going to get you pre-qualified and or pre-approved. There is a difference. Pre-qual is kind of a vague and not really legit. The pre-approved is, in most lenders, they all have the same process, credit, income, and assets. So they're going to usually need your last 2 years W-2s or 1099s if you're self-employed, your last 2 months pay stubs, your last 2 months bank statements, and any kind of savings that shows you have money down or any money saved at all, and basically how you intend on coming up with the down payment. A lot of lenders have programs you can get, like sometimes as low as 3.5% down. There's programs they'll help you out with. And again, if you meet with them, it's free consultation, free evaluation. They'll run your credit. It doesn't affect your credit too much. A lot of people get worried about that. Maybe a few points, it'll drop it. But again, lenders base their credit on ranges. So like, for example, 740 plus up is usually good credit. So it doesn't matter if you have 780, 800, 850, or sometimes they start at 770. It depends, but they have a range. So running your credit is only going to help you in the beginning, and if there's improvements to be made, then they could help you work on that. And again, the rent to own, we have a credit restoration guy that can help out as well. So that's that. Once you find out you get pre-approved and you're kind of comfortable with your price range, as mentioned, when they say, hey, congratulations, we can get you a loan. You're pre-approved for $600, here's your payments. And you say, well, what's my payment if I only do $500? And you're more comfortable with that. They say, cool, everyone's happy. They'll give you what's called a pre-approval letter, and that's what we as agents need to submit offers. And that's good for usually 60, 90 days, and you can refresh them often. And again, there's no obligation. You don't have to use it. You're not committing to buy a home or committing to that lender. You're not paying anyone any money. That's just for you to go shopping so you know where you're at, and the lenders know, the realtors know, we know what your price range is. And if you ever find a home, then we can submit the offer if you're ready and if you're willing at that point in time to do it. So again, it's pretty simple. It is. I mean, it's a little time consuming, and it kind of you have to gather a bunch of docs, but it's pretty simple, pretty easy. And at that point, once you go shopping, you say, hey, we're looking in the 600K range. That's our max. We'll find some homes for you. I'll kind of, as an agent, share with you what the market's doing, what I think's good, what's bad, and what I think the things will go for. My job as your agent is to offer you stats and trends and show you what the market's doing. You're in complete control. You control the purchase, the offers you want to make. We just give you our advice and suggestions, and kind of guide you along that process. It's usually in your best interest to kind of take that advice because, like I said, we've been doing this for a while, and we kind of see the trends, and we see people get rejected and why, and how the homes are selling, what they're selling for. So that's kind of where we come in. Once you get your offer accepted, there's usually, now everything, I should tell you, in real estate, everything's negotiable. And there's different seasons, different times. So, for example, if you get your offer accepted, you're hopefully going to have some time for inspections. You're going to want to get a home inspection. And just so you know, buyers usually pay for home inspections. Sometimes the sellers have one ready for you. You can choose to use, or you can get your own. It does cost you as the buyer. It's in your best interest to get a home inspection. You usually get a termite inspection. So these are extra fees that you'll have to come up with if you want to purchase the home. A lot of times your lender's going to have what they call an appraisal and loan approval contingency time. So there's three major ones: loan, appraisal, and inspection. So the inspection is something that the agents usually help you out with. We can kind of give you a referral for that, and they'll go in, do the home inspection, and tell you what they think is good and bad with the home, so you can kind of make it an assessed judgment on the risk, whether it's worth you want to move forward or not. And then the lender, if they're going to give you a ton of money, they need to make sure the home's worth what you're paying for. So they'll go out and make sure it'll appraise for that value. Obviously, if it appraises for less or more, then you have some issues you have to overcome. And then the loan approval. So this is where it gets a little confusing. When you get that pre-approval letter, it doesn't mean you are approved. It means you are pre-approved. It means they vetted you enough to feel comfortable with your loan closing. So after you get into a contract, lenders, and I'm just going to tell you this and be honest, with my investment properties too, it's a pain, and it frustrates me every time. They're going to ask you for every piece of paper under the sun, but that's kind of how that works. And then once you get past all that and all your contingencies are passed, you're pretty much just waiting to fund the loan, close and sign, and get the keys. So hopefully that's it in the simplest form. There's way more to it, and it's obviously when you're in it, it seems overwhelming, but that's the simple process breakdown. Now, regarding rent to own, aka it's also known as a lease option. You might hear a lot of things about this. So this is kind of ideal for someone that maybe their credit's not all that great. They have some things they need to work on. Actually, this is prime time. Interest rates starting to rise. Prices are kind of overwhelming or high. And you're getting beat out by other buyers. So it's not very popular. In fact, I don't know anyone locally that really does this. But again, this is kind of what worked out with our condo. I thought it was great. The guy that lived there rented from us for a year, and then he purchased the home. And then now he's selling it back, and he made a decent amount of money. And so he made that money while he was just living there. So he didn't have to do anything to earn it other than live in that home. So this is kind of, again, may or may not be suited for you if you're a renter, if you're renting currently, and like I said, your credit's not all that great, but maybe you have a good job, good income, and need some time to work on your credit, then it's probably an ideal fit for you. And I'll tell you some of the pros and cons as we get into this. Also, like I said, so while you're renting, you have some time to work out your credit, and we'll get into pros and cons. So how does it work? So to simplify this, basically it's kind of a mixture of contracts. It's kind of a purchase agreement and a lease agreement with an option. So the renter agrees to lease the home for a specific period with the option to buy before the lease ends. So you are committing to purchase the home on a rent to own. You're not just renting and then just, I don't want it. You are committed to purchase this home. The agreement includes a standard lease and an option to buy later. That means the renter pays a one-time option fee that is non-refundable but can be applied towards the purchase price and or closing costs. This is kind of known as skin in the game. That fee usually averages anywhere from 1 to 5%. Again, so if you're buying a home, for this example, let's just say a $400,000 home, 1% option fee, if that was the price, you're looking at putting up $4,000 of that money that you could forfeit or lose if you don't exercise your option. So again, this is incentive for you. It shows that you're committed and willing to do what you need to do to buy the home, and it also On the selling side, it gives some skin in the game to the seller, knowing, okay, they showed some skin in the game, they put a little bit of money in here, they're taking a little bit of a risk. If they don't come through with what they've committed, then they lose that option, that money. So that's really the only risk, or I say major cost that you would lose in a lease option, at least with what we're doing. So there's two types of rent to own. There's a lease option. This is what we're talking about. And this is the safer bet. You don't really want to do a lease purchase, although you definitely can. But the lease option, again, gives you an option to buy or walk away with no obligation. So, for example, you are renting a home, this is say for $2,400 a month. The option is to say $4,000. You put the deposit down. You have a 1 year, let's just say, to exercise that option. At the end of the year, the option time comes up, and we say, hey, it's time for you to be ready. You got to commit to buying this home now. And you say, I'm not interested. I don't like this home, or I lost my job, or whatever. It's unfortunate. You lose that $4K, and the rent is the rent, so you don't get that back, and you would get your security deposit back, minus any damages, of course. But that's what you're not obligated to buy at that point in time. The lease purchase is a little bit different. You are obligated to buy, so you've committed. And if you say, hey, it's been at the end of my lease here, I tried to work on my credit and it just got worse, or I didn't do anything, or I got lazy, or I didn't have time to fix it, or things didn't work out. Sorry, I'm not qualified. And the lender says, yeah, I can't get him a loan either. It doesn't matter. You're stuck. Then you kind of get into litigation. Like I said, that's kind of a nightmare. No one wants to do that. But that's why we're not really going with the purchase. And the deposit's usually a lot higher. Also, the advantage of the lease option is a portion of the rent may be applied towards the purchase price and closing costs. So, for example, let's just say the rent is $2,500 a month. So that's what you could lose too. Well, you don't technically lose it because you're renting, but at the end of that option time, you say, I want to. We're ready. I put the option fee down, deposit down. We've been paying you $2,500 a month. Well, we could say, well, we'll use $200 a month of that rent to apply towards your purchase or closing costs as well. So you say $200 times 12 months is $2,400. So that's some extra money that can go be applied towards the purchase of your home. So again, it's an incentive for you to try to purchase the home, and that's kind of some of the benefits. So some of the benefits here for you is you grow and obtain equity in your future home. So while you're living there, hopefully the market goes up. Now this is a risk buyer and seller takes. Obviously you're renting. No one controls the market, so if the home's worth $400,000, that's your option lock-in purchase price. Then the year it's worth $350,000. That's a risk you and the seller took. So now his house is worth less too, and but you agreed to buy it at $400,000, and now you walk away. So now he's stuck with that when you could have just sold it at that time. And likewise, you said, hey, I could have bought it, but now it's worth less. So you could decide to walk away and lose your option fee, and leave it back in the seller's hand. So that's a little bit of the gamble, but again, that's it's mutual. There's no one knows what's happening. Right now, things are going up, so it's in your interest at this point in time. But so yeah, while you're living there, you're basically hopefully your home's value is going up, so you're making some improvement. Now you should understand too, when you do the purchase price on option, we do price things. We factor in some inflation. So if the market value is $350,000. The option buy might be $370,000, $375,000. I don't know, I'm just using numbers. But the inflation right now, I think, is like 20-something% in our area, so it's out of control. But that's kind of how it goes. You avoid competition in the tough sellers market. So, for example, right now, like I mentioned, first-time buyers, FHA loans are getting less accepted than someone that's got a conventional loan. That meaning 20-25% down. There are other less conventional loans, but usually the higher down is the better offer to the seller, so they're going to pick something like that, or cash, of course. They might pick that over first-time buyer. And again, we talked about the ability to pay some of your rent towards the purchase of the home, so that's an added feature. So for the seller, if the going rates for rent is say $2,200, but they're applying, but they're charging you $2,400. It's not that much more monthly, but again, so if you don't exercise your option, you lose that, extra money. So again, it's kind of pros and cons. The price is set, fixed in advance, so at least you know what the purchase price is. And then for this program, you have a team helping you out. So again, if you get vetted, you say I'm interested, you're going to apply through Brandon. He's going to kind of give an assessment of where you're at. He's going to let me know, if you can afford it. Now the rental requirements. So again, remember it's two contracts. So qualifying to purchase a home is a little bit different than renting a home. They're very, very similar, but they are different. So for example, on rentals, just to qualify for rent, on average, the market usually wants to see 2.5 or 3 times a combined gross income against the rent. So in other words, if the rent's $2,000 a month, you and your significant other, spouse, partner, whoever is going to live there is anyone 18 years and older needs to apply. So your combined gross income, that's before taxes, so the total, the bigger number, needs to be at least $6,000. So that's usually a general renting requirement. Now for purchasing home, they call front end, back end ratios. They do a debt income analysis, and I don't know how they figure that stuff out, but it's a little bit different. So you'd have to when you talk to your lender, know if you're going to be able to work things out within 6 months, 9 months, a year, whatever time we decide for your lease option. That's negotiable. We personally want to do it as soon as possible on the Winding Lane. I don't really want to be a landlord or a renter. We could just sell it quickly now in this market, but the goal is hopefully someone gets in and kind of has the opportunity to purchase their home. So again, that's kind of what we're looking at. So it's up to you. And you do have to have like a combined credit score of, we're kind of looking for low 600s, but again, that's kind of negotiable. But on the renting side, usually that's what they're looking for. And again, once you go through this process and we do the lease option, you say, yeah, I want to do it, you'll have talked to Brandon and you'll have talked to Diego maybe if needed to be assured that, you have a good chance of making this happen. So a lot of the weights and burdens on you. Obviously, it's not like your credit just gets fixed automatically. He'll give you a free little evaluation. Say, yeah, I could fix this probably in 3-4 months. This is what it'll cost you if you want to do it, and you can make that choice at that time. And he might ask you to do some things, and said if you're willing to do it and you listen, it should pay off. If not, then your credit isn't going to improve and you're risking losing the option fee. And again, also on the purchase option, you do have your option fee, and don't confuse that with your security deposit, because you have 2 separate contracts. So usually you were going to ask for the first month's rent and a security deposit, and on the option side there'll be an option fee, which is non-refundable if you don't exercise that option. But at the end of the option time, you say, yeah, we're going to buy it. That option fee gets applied towards the purchase of your home, so you didn't really lose that money. And we could apply your security deposit as well, since we're the seller owners as well. We could take that, apply it towards your purchase, and then you have some of the rent that we can agree upon. So like I said, it's a really good program for anyone in that situation. It's not a scam. It's not a scheme. You could talk to 8 other agents, of course, and attorneys, do what you got to do. And I can send you a link that has some helpful information. But everything will be in writing. That's kind of how it works. There's nothing, everything's transparent and open. But that's kind of how that works. And you get to live there for your option time, for your lease rental option time. The risk, again, the major risk is you forfeit the option fee. So let's just say we're doing a 6-month lease option. In 6 months, you haven't touched your credit repair and you're still not qualified to buy and you can't buy. Well, then we say that your option's gone. We're keeping the whatever option fee we agree on. And you might continue to rent, or your rent time might be up too, so you might have to find another place to stay or what have you. So that's some of your risk. And we're seeing this right now, the interest rates could continue to rise. So like right now, if you say, yeah, you talk to the lender, they say interest rates are about 5%, and then 9 months from now, interest rates are at 8%. Well, it's kind of out of your control. It's out of my control. It's out of anyone's control. No one knows what those rates will be, and you just can't do it. It's a risk that we both have taken. Like I said, we could have sold the home at that time, but we didn't. We went in good faith thinking you're going to try to do things to purchase and own it, and these things are out of your control as well. So again, you might have to just walk away. But interest rates are always questionable, and right now things are volatile, so that's definitely something you need to consider. And again, we talked about the value. So the home could lose value. We could agree to sell the home to you at the time we talk. Let's just say, for easy numbers, $400,000. And again, when the option time comes, 9 months, 6 months, a year later, and it's worth $350,000. You might say it's not worth it anymore, and I would say, well, I agree or disagree, but whatever. You lose that option fee, or a year we could lock in the option price at $400,000, and then a year later it's actually worth $450,000, and then I could come back upset, right, and say, hey, this home's worth way more than $400,000, and you can say, too bad, we agreed, and that's the gamble I take. So that's something that no one knows, but those are the risks. The market is the market, the future is the future. Unless you have some insight with God, I don't know what to tell you on that. But those are the risks. There's others you want to let me know of that I may have missed out on. I don't really know of any. But here's the benefits and risks to us. So in Winding Lane, for example, Winding Lane doesn't have to be the one. Like I said, there could be ways for us to work out purchasing a home in the future. We're not kind of at that point yet, but it is possible. We could discuss more in detail later. But for this scenario, we'll just stick with the Winding Lane condo, and I'll be the seller in this scenario just to make things a little more helpful. So the benefits to the seller is, again, we get to help the first-time buyers obtain a home, especially in a competitive market. As I said, right now, first-time buyers out there, FHA loans, they're getting beat up pretty hard, unfortunately, but that's just the way it is, and it's sad, but it's a sad truth. And then we get to, as the seller, obtain some predetermined equity. Like I said, if the home is worth market value is $370 now, the option price might be $390. So at least we know that's what we sold it for, and whether a year from now, if it's worth $450, then it's our loss, or if it's worth less. So we're kind of assuming that it's hopefully going to go up, which it should. But again, we're selling it in advance, so that's kind of the hope there. And we get to obtain potential clients. So the truth is, the rent-to-owns program, no one's out there really doing it. I do think it's helpful for first-time buyers. And like I said, maybe you talk to our lender, and you might even be ready. You might actually be ready to buy now, and you could look at something other than what the rent-to-own home, and I could take you shopping. And so hopefully I'll get a client, maybe. You'll be a future home buyer. And just get to know you. That's the main thing, is kind of relationships over time. Hopefully I could help you out, help someone else you know out. Kind of be a good source for that, and kind of like everyone types wins. It's kind of the spiritual principle of investment and return, right? You kind of invest in someone, and then all good things kind of come back. And then also you have a motivated temporary renter who help care for the home. So hopefully, the goal, the idea is, as landlords, and I don't want to use landlord, it's a bad term, but as someone renting to a tenant that's just a tenant and has no desire or interest to own the home, you run the risk that they obviously don't have the same care as you would in the home, right? They might not want to take care of it as much. And but if you're going to be living there, you're going to hopefully appreciate it a little more and give you some incentive to care for it, and hopefully that'll be your home. And then there's also there is some stipulations in the rent-to-own contract. For example, there are legal things as owners are obligated, water, hot water, smoke detectors, carbon monoxide, those type of things. But if you get in rent-to-own and you're there and you're like, hey, I want some new countertops just because you want to upgrade, those are things that obviously you won't get accommodated. You're still renting, so the repairs are kind of dependable on situations. So again, you're not taking that time to get everything fixed and upgraded and replaced. Is what I'm saying. And then also we do make a little more monthly income on rent. Like I said, with the rent-to-own option, rent's always subjective, and so there's always a range. So on the rent to own, we'll stick with the higher range. So if I'm going to rent it without an incentive to sell it, I could rent it for just say $2,200 a month. Maybe that's a more fair, or I don't want to say fair, but that is a better price. I might get more clients interested in, or renters at that price. But if I'm doing a rent to own, we can go a little bit higher on the higher end of the market. And again, we could rent it higher as well without even doing rent to own, and most likely get it. But there's less worry if we're renting it for $2,400. And the market maybe just kind of stretching it. So there's a little bit of income we'll make at the end of the year if you don't exercise that option. The risk, obviously, is the equity appreciation exceeds the predetermined sale price. Said if we agree at $400 and a year later it's worth $430, I can't come back to you and say it's worth more now. That's my loss. Or you walk away from the deal and we're left with an unwanted rental now or undervalued home. So again, we agreed at $400. Now the market takes a crash. It's only worth $350, and the rent's way lower than it used to be. And you say, keep my option. This house is not worth it. You walk away. I'm stuck with it too. So that's kind of. And then I have the mortgage. No matter what happens, I still, if it's not, no one's renting it, no one's buying it. As the owner, I still have to pay that mortgage no matter what, and I'm still responsible for property taxes and insurance on it. So again, it's kind of, and I put up. Obviously, we're putting up. We put our skin in the game. We put a down payment on the home as well. So I don't have that much cash just sitting around. So I got a loan on the place as well until the new owner records. And so that's kind of it. I know there's a lot of information. I went pretty quick. I drink a lot of coffee, so talking pretty fast. But I'm not good with these little videos and presentations. But I hope that's helpful. So we're at the point now. Summary what to do now. Like I said, hopefully that just kind of gave you some, a little bit of insight as to how it works. And if you're interested, you can go online, apply with Brandon, let him know it's the rent to own. You're talk to Ryan's for, whatever home this is regarding, most likely a condo for now. If you do that, please be prepared and have ready your last 2 months pay stubs, your last 2 months bank statements, last 2 years of your W-2s, or again, 1099 if you're self-employed. It's totally free. You can email him or call him first. You can email me for his information. I will send you the link, actually, if you're interested, and we can go from there. And then the way that process works is when you apply online, there's like a little upload documents button, so you can upload all that stuff. And again, this is a vetting and verification process. So from here, he's just going to give you kind of a consultation or assessment to let you know, like, hey, income, you're good to rent, you're good. You're good to buy now at this price if you want, at this rate, or if you do some credit restoration, we can maybe get you a little bit better rate. You can kind of decide from there. If it's if you need some help from a credit restoration guy, he can forward you to Diego. Now he does charge a fee. He can set out payment plans, and again, that's up for you to decide if you want to move forward or not. Even if it's not for the rent to own, I think it's something in your interest to be working on, to be ready to own when the time comes. But that's how that process works. So you'll kind of get a free consultation, free evaluation. When I started out in real estate, I did lease rentals for people through a property management company. And it amazed me how many people were just scared of talking to a lender and getting rejected. The condo, like I said, when I first started out and bought that home a long time ago, I was not qualified to buy that home. But I talked to the lender. I didn't take the rejection personally. He told me what I needed to do. I did it. I followed through, and it kind of helped me out. So worst case scenario, you'll get some free evaluation and consultation on things to do to be ready. I, as an investor, I always have a pre-approval letter on hand. I run my credit every 6 months and know what I can and can't afford in case I see a property of interest, so I could move in and make a purchase on without having to go through the whole application process again. As a first-time buyer, this is the starting point. I definitely suggest you do that regardless. And like I said, you might find out you're ready to purchase the home now. There's lots of loan programs and help. I offer clients 0.5% credit. A lot of people don't know buyer's agents. if you were to go home shopping and wanted to purchase a home and you decide to go with me as a realtor, buyers don't pay realtors anything. The sellers do. They usually pay us a certain percentage, and I give a half of that percent back to the buyers to help them out. It's just something I kind of just personally do. So you may be ready, you may be closer than you think, and you might just not be interested, period, and then obviously you just don't do anything and you're fine. Or like you could apply, run your credit, do the evaluation, and decide it's too much effort and energy, or you're too far away anyways, and so you just don't want to do anything, and that's fine too. But at least you know where you're at and where you stand. So I just think it's good advice. If you have nothing to lose, have a little bit of time, energy. So again, that's kind of the process. I hope this is helpful. If you have any questions, please, it's best to email me. I don't have my email up here right now. Sorry for that. It's Ryan Colcord. Oh, there it is. RyanColcord@gmail.com. I could send you some links on the rent-to-own process. I could actually give you Brandon's information, so you could, like I said, if you want to apply online, you can. If you have any other, like I said, questions, feel free to reach out. It's a pleasure. God bless you, and I hope that things go well. And have a great day.